You know, our daily stock market reports here on CBS 6 give you the numbers for the Dow Jones Industrial Average, the NASDAQ Composite, and the S&P 500. But do you know what those indexes actually are? Local financial expert J.B. Bryan is here today to help us understand one of those a little better in particular. Good morning, J.B.
It's good to be here, Cheryl. Good morning to you.
Good to have you here. We were talking about all the indexes yesterday because two of those indexes I mentioned hit record highs yesterday. So that was very empowering for people who have money into the stock market.
It is, and in many ways, it creates more questions, and it creates a lot more responsibility for you as an investor. So it's good that we're having this discussion because the numbers sometimes don't represent exactly what you have going on in your own pocket.
Do you find that a lot of people get into the stock market or put money in their 401k and truly don't understand where their money is?
Unfortunately, they do. And if you don't understand the time value of money and how important it is to make wise investments and have an understanding of equities and bonds and real estate and all of the different asset classes that you might have in that 401k, the earlier you grasp the investment options and a full understanding of their historical performance and your own risk tolerance, the better you'll be off over the long term and be able to handle times like these and times that aren't as good as these.
Yeah, because we've seen some of those recently where we've seen some bottoms there. Let's talk specifically, you want to talk about the S&P 500, and I was asking you, are there really 500 indexes or stocks in that index?
And most importantly, it's looking at companies in the U.S. and how strong the companies in the U.S. and it represents how well the companies in the U.S. are actually doing. So when you look at the S&P 500 and when we're talking about how it's had a run up for this last 10 years, you know, we want to think, has it actually done that well? Have we had some drops in that period? Yes. But none of them were enough to call it a major correction of more than 20%. So then that's why we can say we have historical highs. But, Cheryl, people who really were investing before 2009, it took until 2013 for them to really see a recovery overall, generally.
Because 2008 was a horrible year for investments.
Yes, 2008 was a hard year, and all of those years up to 2013, if you were an avid equity investor, you know, you had to really wait a lot of time before you saw your portfolio progress if you kept it the same. But after, but we still can consider that time from March 2009 until August of this year as a major bull market for the S&P as an indicator. But an interesting point also about the S&P is that I bet that originally the S&P only included stocks from the New York Stock Exchange, and now it includes stocks from the NASDAQ exchange, which back in the day were considered small companies. But now these technology companies that are traded on the NASDAQ are included in the S&P 500 of those 500 large cap companies in the U.S. So it's a good indicator for the U.S. market.
Well, you had a question here that says, so does this mean now is the time to sell all your stock positions for profits because things are doing well?
It means it's time for you to evaluate your personal portfolio and see if rebalancing is an important part for you. Or rebalancing will mean that you will sell off some of your top performers and reposition into some areas that aren't doing so well in the marketplace. But some people don't believe in rebalancing. So it's time to talk to your financial advisor about, are my equities outperforming? Is it time to reposition or reduce my exposure to stocks? Or am I able to handle the expected? There will be times that aren't as great as this when you're talking about the stock market. Am I poised with a well-diversified portfolio in order to take on times that are great and times that are not so great? So I guess my biggest take home is to make sure that you have a well-diversified portfolio with some exposure into these S&P, some exposure into the NASDAQ, and some exposure in the Dow components as well, but getting an understanding of These are stocks, and stocks are a great way for long-term investors to outpace the cost of living.
And you said long-term because I was thinking time has to be an important factor in this. If you have a long-term, because you were saying how long it took people to recover from 2008 till now, and that was difficult for people who were in retirement age right then and
That's
trying to
right.
get their money out. So time is a factor, a personal factor.
Based on, if we had a little disclaimer on the, it would say there's no historical performance, is no guarantee
Right.
of future results. But over the long time, we do have a very beautiful graph of equities going up over the last 10 years.
And
Yeah.
historically, the market has gone up. We were talking before the segment started about how the markets have performed going over the last 20 years from maybe 2000 to where we are now at
Yes.
26,000 with the Dow.
True, we're almost at 2020, aren't we?
Yeah.
And indeed, it's just amazing to think about that as a 20-year period. But in March of 2000, that ended that 1990 rally to 2000 because of that tech bubble. It's considered the tech bubble bursting. So yeah, March of 2000 was really a hard time. And now we look at where we are now, so it's about having a good understanding of your risk tolerance. And the people who are benefiting the most today are those who were poised for a long-term investment into the stock market. Because there's a lot of people who lost all faith, sold out, and are just listening to this discussion and maybe wondering if I had stayed on course. But I believe that sleeping well at night is the best thing for you to do. So get an understanding of your own individual risk tolerance.
All
first.
right. Thank you, JB. To help you know more about money and personal finances, JB offers free webinars and seminars every week. If you'd like to find out more about that, just go to WTVR.com/VTM.